For the time being, we're putting the spotlight on the textile and apparel sector. Of course, after US President Donald Trump has issued that executive order on reciprocal tariffs, the fear is that perhaps either India will have to reduce its own tariffs, imports coming into India, or the US is going to be increasing tariffs on many of the product categories and lines. The issue is, how does this impact big exporting sectors out of India? We discussed what happens to defense manufacturers the other day, and today we're putting the spotlight on textiles and apparel because it's a huge export industry for us. So joining us are Sudhir Sekhri, Chairman at the Apparel Export Promotion Council, and Prerna Jhunjhunwala, Vice President, Equity Research at Elara Capital. Thank you very much for joining in, lady and gentlemen. And I'll start with the lady. Prerna, let's go with the numbers first. Textile exports into the US, but companies have done a phenomenal job, right? Groups like Wellspun and so many others, Gokuldas exports, whether it's textiles, terry towels, linen, apparel themselves. So India's done a phenomenal job. Now, is that whole story at risk if the US suddenly increases the tariff barrier, several fold? What are the numbers telling us? What is the export picture now?
So if you look at the US imports, India's market share in home textiles is at around 61.4%, 61.5% approximately. And for terry towels, it's around 45%. For garmenting, it's around 7% odd. So we are a big exporter to US in terms of home textiles, and we are gaining market share in the garmenting business. So it is definitely an important geography for Indian textile exports. Now, in terms of tariffs, if US puts in tariffs, there could be an impact for the cost structure that US importers will have to take into account because of the increase that happens due to tariffs. But at the same time, we'll also have to see how India can be replaced. I don't think so. Such a big geography, India can be replaced in US's imports of textiles. And where do the country finds another alternative? So all these are challenges. Textile industry is a complex supply chain wherein imports happen from multiple countries, but not one country or a few countries can satisfy other countries' demands and skill sets. So hence, we believe that, tariffs could have an impact. There could be talks with the importers, but how much and if at all tariffs comes to India in textiles, we'll have to wait and watch.
Okay, by the way, let's just pull up this table. I think we'll have it. This is a calculation done by Nomura, and it's talking about the total differential tariff. Basically, if you net off how much we're charging for US imports coming in versus what they're charging us, this is the net. So our tariffs obviously are higher, and the differential is as high as 17% in footwear. Food products, it could be 35%. Textiles, about 15.5%. Let's come to Mr. Sekhri as well. Mr. Sekhri, so isn't this a straight area of concern? If the US increases tariffs, what is the blended tariff? What is the import duty one has to pay as of now for apparel exports that are going into the US?
Yeah, and as far as apparel is concerned, I don't think there's much of a concern that we have. Let me explain to you why. You've shown a difference of 15.6% in a difference of tariffs in the textile area. But when you cover apparel, just apparel, the difference is much smaller. It's to the tune of about 7%, because the import duties of garments into the US range from 2.6% to 32%, 33% as a matter of fact. Man-made fabrics, for instance, attract duty as high as 33%. It's the cotton where the duties are lower. Now, I do agree that our exports to the USA are more in cotton fabrics, cotton garments, which forms about 65% of our total exports, whereas the other 35% is rayon or man-made fabric exports. However, if you balance it out, I think the average duty that works out is about, we're still working out the exact details, but it works out to something like 19% if you see an average, and the actual export that is being done, being made in the two categories of cotton and man-made fabric. Now, as far as import duty is concerned, import duty on apparel is 20% with a 2% surcharge. And in certain categories, of course, it goes by it's 45 rupees per piece or 20%, whichever is higher. So if you average it out, it comes to about 24%. So not 24.5%. So if you see the differential is about 5.5 to 6%, as opposed to textiles, where it is, appears to be 15.5%. So, however, why I said that there's not much of a concern, because, if you see it pragmatically, there is a demand for Indian apparel. And if the duties go up in the US because of higher duties in India, that will affect our neighboring countries also. Our competitor, for instance, China is our biggest competitor. And China, we all know that they are being, huge duties are being imposed on China. So China is actually out of the picture when it comes to competition. They are not going to eat into our business at all. On the contrary, probably we are going to eat into their business. We'll get part of their business. Similarly, our other competition is Vietnam, Bangladesh. Bangladesh, which is in our neighborhood, they have their own problems. Their business is not, I don't see any increase in business happening there. I won't say the business will go down, but the 5 to 10% increase they were seeing annually, that is not going to happen because of the political situation over there. So, all said and done, in spite, even if our duties, the government, first of all, we don't know whether the Trump government is going to increase duties because of this slight differential. But I'm saying, even if, as a worst case scenario, even if they do, I don't see our business getting affected in any way.
All right, we take that point, and fair points made out there. The harm would be a lot more on neighboring states like Bangladesh, Vietnam and China, who have been eating away our share of exports as well due to some of their policies, but now they're in economic doldrums. But as you were speaking briefly, the Nifty and the Sensex moved into the green. It was led by the IT pack and it was led by HDFC Bank, pointing out that HDFC Bank has been doing well despite the weakness that we're seeing in the market. HDFC Bank at the higher end of today's trading range so far, and the IT index as well. So both these heavyweight sectors actually, contributing, though just keep an eye out on the Nifty Bank itself, down about 1/3%. Recoveries are being sold into as well. But let's get back to our conversation with Sudhir and Prerna. Sudhir, just a follow-up on what you said. Duties being increased is one thing. The bigger differential is the cost of production. So even if the duties are increased by a certain proportion, the cost would still be a lot cheaper to import as against manufacture locally or look for other alternatives. So if you could give us a sense on, what is the cost differential between Indian products and the ones that are made by our competitors and exported to the US versus what's manufactured in the US itself. That's point number one. And secondly, with the depreciation that we've seen in the rupee, which is much more than what we've seen in some of our peers, how much does your cost advantage improve by?
Okay, let me take it one at a time. See, first of all, when we talk about the cost advantage between that Bangladesh probably has because of their low labor cost over India, that cost advantage would remain even if the duties go up and down. So that cost advantage imbalance will remain. Now, you ask the question whether the manufacturing in US, so there's hardly any manufacturing of garments in the US. Of course, there is manufacturing in South America or Latin America. But again, you know that Mr. Trump is going to impose some duties there too. So I would think that as far as duties is concerned, I think we'll have to see it separately, and because it does not really affect the cost of production. That was your first question. And what was your second question, please?
The depreciation in the rupee, how much has that been an advantage?
Well, of course, definitely, this is going to be a big advantage for exports. We've already seen a depreciation of about, 3 to 4% till now. We expect another 2-3% depreciation. And this means that obviously if I give away the entire gains that I have made to the buyers, then the buyer stands to gain 5 to 6%.
Sure.
The whole lot of money.
No, absolutely. And we have to see how these negotiations go, because the US president has very clearly said the tariff is just one piece. He's looking at a lot of other aspects, including currency, which could be making exports coming into the, or the imports coming into the US cheaper. Very quickly, Prerna, on you, I mean, from a stock perspective, as these negotiations play out, we'll only have clarity, I think, around the 2nd of April or so. Right now, the textile and apparel stocks under your coverage, are you changing any views, anything? And what are your picks? What do you like the most in the whole sector?
Among our coverage, we like Arvind Limited and KPR Mill. Given the price correction in the stocks, they look attractive at current prices. We're not changing our view as of now, as we don't know what is going to happen and what kind of tariffs would be imposed, and will there be any material impact on these stocks. So we'll maintain our positive view on these stocks.
Okay, all right. Ladies and gentlemen, thank you very much. Slightly shorter conversation, but we would definitely want to revisit the issue once we have some more clarity on the, the final tariff lines that are agreed upon between India and the US. But there's AEPC maintaining that Indian apparel exports will not be impacted.